Paul, we've been in this tricky spot for a while here where you had this pretty strong rally off of an October low. That's pretty common way for bear markets to end. On the other hand, you know, the start of a new bull market looks a lot like just another bear market rally. So how do you sift through the evidence to figure out which one this is?
Yeah, so good afternoon, Mike. Like you've been highlighting a lot over the past couple of months, the market has been trying to, stabilize, doing a whole lot of nothing, actually, if you look at it over the last 6 months. But what we've seen and what we, ever since mid-October when the market made new lows, what was encouraging to us is the fact that the list of new individual stock lows was shrinking compared to what we saw in June. And throughout that period, it's continued to shrink, and we've actually routinely seen more new highs than new lows. So that internal, coupled with the fact that credit spreads didn't blow out to new highs and remained pretty well contained, was an encouraging signal for us there. You've also seen this week, you saw the market at very overbought levels that had led to sell-offs every other time this year. This week, we've actually seen the market continue to rally. So that's an encouraging sign for us as well. So those internals are diametrically opposed to what has been some very weak economic data. And it seems every day we see a new indicator telling us that a recession is either imminent or, we're in one. But when we're forced to choose between those two, we always will side with the message of the market. And that's been more positive right now.
What do you say to those,
go ahead,
Paul, who say that the message of the bond market is that we ought to basically bake in expectations of a recession, given how the yield curve is set up, the Fed tightening into a slowdown, et cetera?
Yeah, so I think the Fed is basically seems to be looking at things on a tape delay these days because they were last to see inflation coming through, and as inflation has shown signs of easing, we've continued to see the Fed talk hawkish. As every indication we see on a day-by-day basis tells us that inflation's coming in. When we look at the economic data and the bond market interest rates coming in, I'm as, confused as anybody else as to, it doesn't look good. But whenever you see this situation where things don't look good, but the market is telling you a different message, the market usually ends up being right.